Now on to the market report with Leighton, who says that while it's not invulnerable, the market isn't quite the kryptonite as some are making it out to be.
That's right, Mike. There is some optimism out there regarding the commodity markets, and I think you'll pick up on that in the next few minutes. U.S. grain supplies provide a strong hand as far as NAFTA negotiations. Hog prices continue to hold up, even in the face of all the tariff talk in the global market, while tight supplies and strong demand continue to underpin the cotton market. U.S. Senate Republicans are urging the president to wrap up NAFTA renegotiations by Labor Day to avoid further political damage. However, some commodity traders say the U.S. can talk big as far as tariffs and such. That's because the South American drought put the United States in the driver's seat with plenty of grain and oilseed supplies that other countries need.
If we hadn't seen a South American drought, we would be in trouble. We would probably see cash corn down below $3 instead of up around $4. We would see cash soybeans getting tanked. Wheat would probably be in trouble if we hadn't had a drought in South America, but we did. So Mexico can't necessarily turn to Brazil to fill its needs. China can't look for Brazil and Argentina to fill its needs. They're going to have to come back to the United States. So we can sit here and say, we're putting tariffs on you, we're putting tariffs on you, we're putting tariffs on you, we're getting a trade war with you. We can do that to everybody because we can.
December corn futures closed at $3.98 on Tuesday. Despite the growing concern among hog producers that you saw at the beginning of this program, trader John Roach says the reality is there has been no slide in farm gate prices for pork yet, despite all the tariff talk. Here's his explanation of what's going on with hogs.
Markets will usually tell you if you'll pay attention. And so if you get a lot of bad news, which the hog markets had a lot of bad news, but the market doesn't go down, or maybe it goes down a little, but it doesn't stay down. It tells you that the biggest money, the smartest money is betting on prices to recover some. And that's the way we close the hog market today. We close the hog market today strong. The cash hog market's very strong. It makes a person believe that either they're going to find a solution to the tariffs, or that maybe they don't think that there'll be such loss of business. I'm not sure exactly, but the market's telling us that don't be too bearish on the hog market right now based on just the way we traded this week.
July hog futures were at 81.45 a few hours before we recorded this show. Our trivia quiz this week takes us back in history a few decades. Here's the quiz question. Where was Mississippi's first soybean oil mill located? Is the answer A, Belzona, B, Greenwood, C, Clarksdale, or D, Yazoo City? We'll have the answer coming up in a moment. A lot of the spotlight is on the hog market as far as who's getting hurt the most by the NAFTA renegotiation. However, Extension livestock economist Josh Maples sees the situation a little bit differently.
I would argue that NAFTA is certainly a bigger deal for the cattle industry than a lot of the discussions that we're seeing about China right now. But, as we watch these play out, and I don't have any big insights about what's going to happen with either one, I don't really think anybody can say with certainty exactly how either one of those situations is going to eventually play out. But what needs to be kept in focus here, especially with respect to the cattle industry, is that market access to other countries is extremely important for our export market, and our export market is extremely important to our industry, especially in times of growing supplies. We have a lot more cattle, a lot more calves planned to hit the ground this year than we did, say, 5 or 6 years ago. And so we're at a time where we got a lot more cattle coming through. We're going to have a lot more beef that we either have to consume or export. And so gaining or keeping access to other countries is going to be extremely important. So I think that's one thing to make sure that we keep as a focal point in terms of market access with these countries anytime we see trade talks in the news.
Strong sales are what's happening in the cotton market here at mid-month. Some economists think the official numbers may even be underreporting what is largely described as a well-supported trade right now.
We've got a tighter supply and demand situation than what we're being told right now. I think we have extraordinary demand. I think we have tighter supplies, probably coming out of 17-18, certainly going into 18-19. As far as the supplies go, beginning stocks go, I think it's going to be much tighter. That's going to keep some support underneath this market. Now, could this be a blow off top? We're reaching multi-year highs right now. I mean, we've got both old crop and new crop approaching $1, and that's going to be tough to pop through. But right now, you've got buying coming from from commercial buyers, good demand. Looks like it's well supported.
July cotton was at 95.21 as we recorded Farm Week. Back to the trivia quiz now as we wrap things up here in the markets. We are delving into history again and the history of Mississippi agriculture. Where was Mississippi's first soybean oil mill located? The correct answer is A, Belzona, according to the 75th anniversary issue of Delta Farm Press.